Hey folks, welcome back to the LandFixer podcast. I'm your host, as usual, Logan Swanson, and we are joined today by Dave Denniston all the way up in Minnesota. Say hi to everybody.
Logan, what's going on? Glad to be here. You're from Wisconsin originally, so you know what's up this time of the year. We're almost to the nice season here in Minnesota.
Yes, I miss it. Actually, when we go up north to visit my family, my family lives right up on the border of Wisconsin and Minnesota, so we usually stay in Stillwater, Minnesota.
Yeah,
That's
yeah,
so
yeah.
pretty. It's so beautiful up there. Folks, as usual, if you need funding for any of your land flips, check out www.landpartnerfunding.com. We can help you on flips, subdivisions, entitlement projects, whatever you got, as long as it's not vertical. We only do horizontal. Um, and other than that, if you want a JV or partner on any deals, if you are a land owner and you're looking to maximize your returns on your land, you can reach out to me at thelandfixer@gmail.com. But today, you don't want to hear about me. You want to hear about Dave. Dave, can you tell the audience here how you got into land a little bit? And I guess got in, I don't know, do you still do your financial planning business?
Yeah. Well, first, thanks so much for being here. You and I have been Facebook friends for probably 6 years or something. So it's just really cool to be able to connect and chat and hang out together here for a bit. So thank you so much for having me on. It's always fun talking land with friends and people that have experience. I think we started around the same time, right? Like twenty
Yeah, and I don't
seventeen,
even know if you
2018,
remember,
something like
but
that.
you were also one of the early adopters of my marketplace company. We ran a bunch of ads for y'all for about 3 to 6 months, and that was a whole
Yeah.
thing. But um, yeah, I mean, I think we started around the same time.
Yeah, we did. So yeah, as you mentioned, my background's in finance, financial planning. So I've been doing that now since 2002, since I've been in that business. So like 23 years, lots of ups and downs in that time period. And I'll make it real short. But for anyone that wants to hear about it, basically, I was working for other people for a time in financial planning, got to the point in 2007 where I was like, you know what? I know enough. I figured this out. I had gotten an inheritance and I was like, I'm going to go buy someone else's practice. So August 1st, 2008, I closed on an acquisition that I literally had no debt before, but then I levered up going into it.
Mm.
And that made me figure out I don't want to ever be solo dependent on one stream of income ever again. And so I explored a lot of different things after that, getting through that crisis, and the bottom of everything was falling out, and we started coming back out of it. And so I started a podcast. I started writing books. I started um, doing all different kinds of things. I ended up acquiring a mobile gaming kit business with a cousin. And through the years, through my podcast, got exposure to a lot of different things, which was called the Freedom Formula for a Physician. So it was kind of wealth management, taxes, debt related stuff for doctors. And ended up having Podolsky come on my podcast
Mm.
in early 2017. It was snowing. I remember at the time, like January, February, or something like that. And took some time to think about it, and ended up buying his course in July, started buying and selling land in October of 2017. And here we are 8 years later, where a lot of other things I didn't really work out the way that I wanted it to, but land has been an awesome blessing to me and my family, still doing the financial planning thing. So I've built this business part time the last 8 years and
Mm-hmm.
pretty proud of what we've been able to build. Done a lot of coming up through the Land Geek model, did a lot of owner financing and
Mm-hmm.
stuff like that, and gradually kind of been making my way up. I've always kind of felt like I wanted to really master one thing before I kind of move on to the next. Like some people, I don't know how they do it. They just like totally like switch the system. They were doing the land geek stuff, and then they were doing cash flips, and then they were doing
Uh-huh.
subdivides, and then messy title stuff. And it's like I can barely keep up with the stuff that I got, let alone burn all the boats and start all over again. So we've really, I feel, mastered the small stuff, and now I feel like we're still kind of mastering medium-sized properties, which I define as buying between 10,000 and 200,000
Uh-huh.
type price range, where you might do some minor splits, but most of the time you're just trying to flip the thing. Maybe you clear some of the stuff. Maybe you might look at changing things here and there, but for the most part, just flipping
Yeah.
stuff and doing that. So
And you're
that's a very
buying
short
them.
synopsis of where we're at.
Are you buying cash outright still?
Yeah, yeah. So we do have so what we do when we get to an acquisition manager conversation is they'll have a price range of saying, hey, if we're buying cash, these are these prices to close in 30 days. But also here's a double close price
Mm-hmm.
if you're not able to negotiate them down. And so we do offer double closes. We've done a few, but not a lot.
Yeah.
I just look at it as it's a profit maximizer. So I want to do mostly flips just because my history being a lot of stuff doesn't sell in 4 months, right? And so like
Unfortunately.
we need that extended time period to sell things. A lot of our stuff sells in 5 months or 6 months or 8 months or maybe a year.
Yeah.
And so that's just how it goes. Even markets we think are pretty good sometimes take a lot longer than we thought. So we're definitely not opposed to doing double closing, but it's not like our main focus of the business model.
Yeah, that's interesting. So in our business, I don't even have, I guess I sort of have an acquisition. I have a transaction coordinator. Sometimes she'll handle those acquisition calls, but it's mostly just on me. And I just we have a local meetup here called the DFW Land Investor Group. And we have a seminar every month. And this last Friday was a seminar. You might know him, John Jasniak came in and spoke. And
Yeah.
I did a presentation over acquisitions. And I said on every phone call, what I do, and I suggest other folks do, is you have cash price, a wholesale price. So if you're going to try to get it under contract and double close it, you should have some sort of owner finance structure, depending on the size of the property. Obviously, you don't want to owner finance something that's worth 10 grand, but and then finally, you should have a realtor referral. So if you go through all those options and none of them pan out, then you should have a realtor that you say, hey, it's clear you want top dollar. You're only going to get that from the market, and I happen to know the best guy. So that way you never waste a phone call. So I think that's really smart. I mean, if you have your acquisition managers trained up to give more than one option, I mean, that's more than a lot of people. And do you hire only in the States for acquisition managers, or do you have like the Filipino crew running that?
Yeah. So lead managers, I had domestic, but I had them on part time because it was so flippin' expensive,
Yeah.
right? Like for a lead manager, I didn't want to do that, and they closed some decent deals, but like I found we were needing to do more and more training,
Hmm.
and so like you think about it, if someone's working 4 hours a day, they're a stay-at-home mom, like. If we're doing 1 hour of training every 2 or 3 days, like they don't have much time to actually do the job, right? And
Yeah.
so wanting to really train people in, we made our lead managers international. And then we started getting to the acquisition manager side a year ago. And so initially, I had my primary sales gal, Christy, who's been with me for 6 years or something like that, wear both the dispo hat and the acquisition hat. And as we got into
That's a heavy
late,
hat.
it's a heavy hat. As we got
Yeah.
into late 2024, I really was realizing, hey, properties aren't moving as fast as I want. And so let me hire two more. So I took on two more hybrid roles of sales slash acquisition. And the reason I did that is because we have a lot of cheaper properties that are easier to sell. And often, you would primary channels being Lance.com, Land Century,
Yep.
Land Flip, all of those different websites, plus Facebook, right? And so I figured, hey, if we have more of us, we can sell more stuff more quickly. I'll end up making more money, take a little bit of a hit. And that way they can earn a commission sooner rather than later versus acquisition manager. You may not get something, commission wise to actually have the property go full cycle for 6 months or something. And so that's why I chose to do hybrid roles all across the board as I built my staff up. So currently I have three kind of hybrid sales acquisition managers that are all domestic. Technically, the ones in Canada, but that's practically domestic, right? So,
Nah, okay, we'll count
yeah, we'll
it.
count it. We'll
For
count it.
you, it's close enough.
That's right. Exactly. Totally.
Well, that's awesome. Yeah, I think that's really smart. I ran something similar in my business. Um, I kind of ended up shying away from, well, one, I moved away from the more affordable properties. So, and I really shrunk my inventory at one point where I was like, honestly, I don't like having the infrastructure to do a lot of deals. I'm just not good at managing it. Um, like if they were local employees, like I don't know if you know Bhaskar Pandey. He's a wholesaler out of Houston, and he's got an office with all of his employees that he steps into every day. I could probably do really well in that environment, but I'm terrible with out of sight, out of mind. So when I had folks like that I was not communicating with regularly, I would immediately get, I don't know, lazy, or I don't know what you want to call it. I just wouldn't communicate well. I wouldn't direct really well. And because of that, it was not effective. So I ended up just kind of backing away and just saying, hey, look, I don't want to have 50 properties or 60 properties in inventory anymore. I want to have 5. And I just want them to be a little bigger ticket price, because I'm like you, I guess we're full time, but for a long time I had other side gigs as well. I had a little construction company going, closed that down. Now we're opening up a coffee shop right now. I don't really like the idea of having one stream of income. So I need my business to sort of fit into that. So it's kind of interesting. I really appreciate that you're sort of the 2 income sort of guy as well, because that scares me, and you kind of are feeling it right now. It's very common. I hear a lot of it. People have either kind of disappeared from the business, like you don't hear them anymore, you don't see them around, or they're actively saying like, "Hey, I'm selling all my properties. Like, who wants all these?" And I think they're also coming to realize that their businesses aren't worth anything. Like if they, other than the property they hold, you're not actually really building something of value outside of the properties. So I guess that kind of leads us to the state of the market, right? So you host this Land Unconference event every year. Where is that this year?
So it's here in Minnesota. It is in early August, August 7th, 8th, 9th, I think are the dates. I don't have it right in front of me right this second. But landunconference.com if people want to apply. Basically, I've been to a lot of different events over the years, whether in
Mm-hmm.
financial planning world or in the land world, where I found that they're fun. But the times I enjoyed most is when I was talking about someone else's business or talking about mine,
Mm-hmm.
right? Where it's like, it's all those side conversations. You go to an event, you have a speaker, which there could be
The
great
dinner
value
after.
from the speaker.
Yeah.
Don't get me wrong, right? But yeah, it's the dinner afterwards. It's the staying up late at the hotel at the bar and, chatting about this and that. And I always found for me, like connecting with people was so important. So I said, hey, rather than putting a speaker up there, what if I put together an event where we have a whole bunch of different masterminds?
Yeah.
So it all started back when I got kicked out of Land Geek back in 2019. And so I started putting on 10-person events basically where I would host people at my office. And every year I did it. And I was like, oh, this is amazing. So we
Yeah.
had 2022. I had Callan Faulkner here, Ajay Sharma, Drew Haney, Brian Rapier, who else? Oh, Greg, Joe Schmidt, Yasir Lillingston. So they all came here, and I said, "Hey guys, if I wanted to make this bigger, what could we do?" Because everyone was like, "Dave, what do you want out of this?
Yeah.
Like, you're not asking us for any money. You're not selling us a program. Like, what are you doing this for?" And I'm like, "I'm doing it for the relationships, and I would love to expand it and impact more people." Because for me, I'm making enough money from financial planning by itself. I mean, I could just live on that. But
Yeah.
if I really want to grow generational wealth and do more things and see more things and impact more people, at the end of the day, that's why I'm doing the land business. I don't have to do it. I do it because I enjoy it. It's fun at times, anyhow. And so I found for me, I'm an introvert. Like if you stick me in a room where I don't know anyone, I will hug the wall. I'll be on my phone, right? But when I get around other land people, it's like these are my people. Like
Right.
I get you, and I have something to say to you that's beyond how are the Lakers doing, or some surfacey conversation that I get bored of really quickly. And you're kind
Mm,
of faking it, and it's like, eh. But when I get around my land peeps, right, we can dive
yeah.
in, talk about stuff that's meaningful, stuff I care about. And so imagine having 5 separate rooms where you have 10 people getting together and having that experience and diving deep for 2 days on everybody's business, where you're getting help on your business, but you're helping other people. And it's not boring. It does get tiring, I'll be honest,
Yeah.
because you're in this room talking about tough things in a lot of cases.
Hmm.
But I just love the community of people. And if anyone wants to come out, hey, apply landunconference.com. We keep it relatively cheap. Plenty of people charge like 5 or 10 or 30 or 50 or a
Yeah. I've seen
hundred
crazy
grand
amounts. Yeah.
for an event like this. And we charge like $1,600 for this event. So it's a fraction of the cost to come to something like this. So get impact, help other people, and you'll get help too and meet a lot of land investors. And it's awesome.
Yeah, and those are some great names. I mean, Drew, Ajay. I know my buddy Jason Woolbrink. He's
Yep.
gone.
Yep.
Um, so if he goes again, no one else is gonna be able to talk because that man knows how to go. You know what I'm saying? But
Jason's awesome.
yeah. Well, awesome. So two things I want to get into from that, but let's just start with like, all right, what are we talking about? 2025. I mean, everybody's saying, I'll just say from my experience, the market's still slow for us. We're hoping we're going to come into some warmer weather here, and we're going to see the market pick up, and some of these properties that we were hoping to have sold in the spring, that are still sitting in inventory through some of our funding partners, are going to start moving again. How are you feeling? Are you optimistic? Are you changing your strategies at all in this economy? What are your thoughts?
Yeah, I was just doing a mini mastermind the other day with Chris Duff and Justin Sleva, and we had a couple of people that we were kind of doing a mini unconference with. And what really strikes me, for me, our business isn't the biggest land business by any means, but we're pretty substantial. Last year we had about 3 million in revenue, and we probably netted, if you look at the book, something like 750 or something like that. So we have a pretty substantial land business, but not the biggest one. There's plenty of other people that have a much larger business than I do. And we have a mix. We have the cheaper stuff we've been talking about, right? That you used to do, but we still do. And then we have what I call medium-sized properties. And so in our inventory, we've had some stuff we bought a year ago that hasn't sold yet. We have some stuff that's sold in a month or two. We have some double closes that have happened. If you look at last year, we had an awesome January through June. January through June of last year was fantastic. And then it hit August
Yeah.
and everything just slowed the heck down.
Yeah.
And we never stopped buying. We still send out plenty of marketing. We primarily do blind offer letters. We were also doing cold calling at that time. And we had lots and lots of leads coming in. And we bought some properties, but man, it was just so hard to buy and was so freaking hard to sell. We started having hard money loans that were coming up,
Hmm.
that properties we hadn't sold, now we have to pay these things off. So I got into a little bit of a cash crunch and stopped paying myself from about September through just this month. I
Yeah.
started paying myself again because we have recurring note income of pretty close to 100,000 a month, not including any note payoffs that might happen. And in that time period, we had almost no note payoffs in September and October. And so when I budget out for the staff, and we have our debt, so we're probably servicing 20,000 a month of debt or something like that at that time. And so it became this time period of what the heck am I going to do? And so after stopping to pay myself, we stopped all outbound marketing in November and December. And then things started to pick up in our business.
Hmm.
And we were still acquiring properties from our prior stuff, and stuff started selling. So as we hit December, we had some double closes that closed. That was great. We had some other properties that sold. January was kind of slow, but then we had a great February 2025, even better March of 2025, and now an even better April of 2025. I think this month we're going to have something like more than likely like 500,000 of rev or something in this month. So it's going to be a heck of a month for us overall. But certainly we're navigating right now tariffs and
Yes.
what's going to happen there. We have probably 3 more closings next month, so we'll probably be on track, assuming everything goes through. We'll probably be on track for a 300 to 400,000 revenue month next month, which one of them's like 120K, so that's a big chunk of that revenue that we're counting on, which I think is probably going to go through, but we'll see. So I chose to delever. So for the longest time, I've done kind of a mix of equity and debt in my business,
Hmm.
and I've leaned more heavily on debt, but now I'm starting to turn the dial back over to equity side of it. Not that we ever stopped doing equity, but I just was doing more and more debt and less equity. So I'm trying to do more equity stuff just so that, hey, our monthly payments are lower. We went from about $30,000 a month in the month of March. This month we're probably going to be closer to 20. Next month we'll probably be closer to 18 or something like that. So I'm quickly delevering a lot of the stuff. Not that I'm not going to do debt. I'm just trying to minimize that risk in my business so that way, if things do go to hell in a handbasket, we'll see
You're
what
not
happens.
burned. Yeah.
We're
Can you
not burned.
explain debt and equity to the audience? Because we have some newer listeners.
Yeah, for sure. So the idea of equity being that we pay for something directly out of our business, or we get equity funders like yourself. I don't know if you do hard money lending
Hmm.
and equity, but more leaning on that, just because the future is so opaque right now. There's no debt payments that we have to make on a monthly basis with any of those things. Either we own it entirely ourselves, or someone else has fronted the equity for it, and so they believe in the deal or believe in our business enough that they'll do it. So it minimizes my monthly obligations. Whereas the debt side, we get a much higher rate of return. Like for example, we have a line through Amex that's like 150K. I think we're tapped at 110 or something of that right now. The interest rate's only 6% on
Woo.
that line. So it's a
Nice.
really, really low interest rate that we can amortize over 2 years. But we still have to pay that bill every month, right? And so that makes my debt obligations rise on a monthly basis, whether stuff is selling or not. So I don't mind debt. I think every company, once they get established, should have some debt because it's much cheaper capital. But as we go into this time period that's uncertain, I mean, for us and our business, we're trying to take less risk in terms of being obligated to have to pay something on a monthly basis, which means we give up some of the upside. But I'm
Hmm.
totally okay with that, with where things are at right now. And I generally suggest if you're a newer person listening to this, work with someone like Logan on the equity side for your first 10, 15, 20 deals. Get a bunch of inventory so that you can have someone else look over your shoulder and say, hey, good deal, bad deal, whatever. I think there's so much value in that for someone starting out, which, yes, you give up a lot of the profits. It's true. But then you don't have some of the obligations and you can run your business leaner in these sorts of situations. What do you
Yeah,
think,
and
Logan? Am
really,
I describing that well? Any
yeah,
feedback?
that's perfect. You're usually going to make more money if you're leveraging debt, but then you're not putting off, what you owe until the end, which is the sweet spot. But, equity lenders, when I started, like everybody was 50-50 or higher, so you were really paying out. And that's gone down. I mean, I was kind of like, when we started our company, I had been not abused, but I had spent so much money at that 50% return on a lot of our deals that we started at 30%. I was looking at margins and I'm like, I'll take a 30% profit on a lot of these deals. But now we're having to shift because the market's constrained. People keep bringing us deals where, we're trying to underwrite at like 50% LTV. So, anything above that, it just really gets tight. You pay brokers, you pay title closings, you try to cut that, everybody has to make money in that deal. And if it's above that, and what's happening is most people are trying to meet that threshold, but they're bringing us comps that aren't really accurate, so their retail value is really more like,
Yeah.
so because of that, like if we're going to approve any deals, we have to take a bigger share. So, but I mean, is that kind of what you're seeing? Or have you modified your purchase threshold at all to get deals through right now?
Well, let me say this to new people too. Like you have to be in the game, right? If you're not getting up to bat and giving yourself a chance to bat, you're just on the bench, right? Which none of us know what's going to happen tomorrow. So you have to get in there, you have to get reps. Don't wait. Like maybe you want to be careful about how you're deploying money. Maybe you want to be careful about what properties that you buy, right? But don't sit on the bench. Be active and be in the game because there's no better way to learn than to do it.
Hmm.
And that's true for me. Despite 7, 8 years worth of experience, right? I'm still learning all the time, learning about what's working and not working, and in this AI changing environment
Yep.
that we're in, you gotta be in the game, and you need to be up to bat. You might strike out, and that's okay, but you need to keep getting swings in, so you give yourself a chance to hit home runs every now and then. I would
Yeah,
say
100%.
to your question, Logan, of are we changing our underwriting criteria? I guess maybe naively, I'm not like stepping. I want to keep getting up to bat because maybe this whole tariff concern goes away, right? I mean, just takes a few strokes of the pen, and rather than a 90-day, it becomes a zero tariff,
Hmm.
right? Like this is completely under the possibility of being in control. The longer and longer it goes, the more concerned I'm going to get
Right.
with it. But right now, as we stand today, you have the basic 10% tariff and the 90-day, which I don't know how many days we're into it right this second, but we're going on a month of that thing, and so I do believe if things don't change, it's not going to be good. But but we've been shifting from a seller's market where it was so hot in 2020, 2021, 2022, going into 2023, which then by mid-year last year, we started shifting to a neutral market in my position where, okay, it's not a seller's market, but it's not a buyer's market
Hmm.
either. And now we're shifting to maybe what could be a buyer's market, which that's where you can make money for a decade, right?
Yep.
Like if this thing continues, if you can hold on as a business, right, you might be able to buy things at such extreme discounts like what happened in 2009, 2010, 2011. There'll be people in the land space going out of business. If I can stick around long enough and pick up a bunch of people's inventory, right, I could
Hmm.
be sitting real pretty for the next 5 years or something like that. So I'm not stopping the marketing. I'm not stopping buying properties. I'm not being super restrictive on what we're buying right this moment. But I am casting a wary eye to the future, just in thinking, what's my next couple of chess moves if it goes here to this bad scenario? Or, hey, if it turns out to be they get rid of the tariffs and we don't go into recession and everything's okay. So I'm preparing for both scenarios, which is why I was saying I'm trying to reduce some of my debt. Am I getting rid of all my debt right now? No. But I am trying to stay ahead of that and make sure I don't
You're
have
balancing it. Yeah. Yeah.
major cash flow issues. So
Yes.
that's
And
my take on it.
that's very wise. And I think we're also at a point where I know personally when I've been on any sort of sales interaction, like I'm selling land on the dispo side, I always confidently tell folks, like, I believe in the value of land. I believe it's one of the most stable assets that you can purchase. Yes, maybe sometimes it's hard to get your cash out of it. But for me, that just gives me confidence to keep buying because I know, like, okay, if I have to hold on to this for a year or 2 years or like worst case scenario, like 3 years or something, like something really crazy goes, I'll still feel fine. This isn't going to just lose a ton of value overnight, unless you're buying something, ridiculous. But I think it's one of those times where you determine, like, okay, how long are you in? Are you one of the people that kind of came in hoping to get rich in a year and it didn't pan out and you're ready to walk? Or, I mean, if you've been in 8 years like we have, then you, I think you get a little bit of the confidence in the product. And when you have confidence in the product, then you're much more comfortable buying, even in what may seem like a downturn. And I agree with you. I think we're going to start seeing more just on market deals. I think if you're really good with creative financing, you're going to be able to make a killing in this next year because there are going to be a lot of people who are like, I just need to sell this. Something might, no one else is making offers, and if I can slide in with a very favorable seller finance term and some of the subdivide projects that we like to do, I think you're going to do real well, real well.
When I think about like us, I mean, we've had 5, 6 acquisition calls a week, right? Which not every one of those turns out. But what's the cost of follow up? I mean, it's
Hmm.
so flippin' cheap once you have a lead in your system. So we've collected all of these leads over the years and just follow up, follow up, follow up. And maybe we don't have to spend much money at all on outbound marketing to get people. And we can just follow up and be real cheap with it, which I think is the beauty about this business. You can spend as much as you want or as little as you want on outbound marketing type stuff.
Yeah, I know somebody who spent most of this year reworking old leads. That's where almost all of her deals came from. I was like, that's pretty smart, you know. I've
Awesome.
always been like, I've always kind of considered leads sort of dried up after a year, after we beat them up a few times. But especially with AI, and certain CRMs that can integrate, like you can really learn a lot about your clientele. I mean, we had at one point, I don't know, 50, 60, 70,000 leads that were at one time considered like warm-ish on the dispo side. So it's like, why not just keep trudging through all those leads?
Cool.
Um, cool. All right. Well, we're getting near the top here. Can you tell us just a little bit more about the Land Unconference event that's coming up? So you said it's like much more relational. You're not selling or pitching anything. Is it true? I've heard folks say that you kind of like one person sits in the middle and talks about their business, and everybody kind of grills them. Is that the style?
Yeah, yeah. So to give a bigger context of it, so the event starts for people that want to with an optional VIP day on the Thursday there in August. I think that's the second Thursday of August. And what happens there is we're going to have a class in the morning, which will be more traditional, but a workshop type thing, where myself and my team we've done a lot of AI related stuff, and so we're going to be sharing, helping you to implement some stuff that we've learned. Not that we know it all, but we want to share with people what we learned. Then the second half of that day, which again, this is totally optional, separate from the main event, we're going to do one-on-one coaching, which we're going to have some of our moderators be available. You want to have someone like Seth help you out, or Justin Sleva, or Ajay. Those guys are all going to be available. Myself, all of us are going to be available for coaching. And then we have a nighttime thing called the VIP night, which we're going to do something real fun. Get the red carpet treatment, hang out, socialize, have an awesome time. Which then the main event starts on the Friday morning. We usually have a workout time. So anyone that wants to participate and work out together, there's nothing that bonds people together than sweating,
Yeah.
right? Sweating and working hard, or an optional breakfast. So we're getting social events for people to connect before the actual thing even starts. And then around 9 a.m. on Friday, we'll get together in one room. I will say, welcome, blah, 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 blah. Here's some of the stats on people in the room. And then we break up into masterminds at that point, which already have been prearranged. You would have probably had 1 to 2 calls with your mastermind group ahead of the event. So before you even get there, you're going to know some people. Maybe you already know some of them already, but get to know some new people too. And then once you're in the mastermind group, just like you said, the person on the hot seat will share a resource. So a book, a podcast, a online tool, a process, something that can help everybody in the room. So they'll spend about 5 minutes on that. And then they just, by this point, everyone should kind of know everyone's business because they've gone through a couple of meetings together. So you don't have to do all that, kind of a thing. They might
Hmm.
give a very brief recap of what their business is like. And then they'll say, hey, I have this issue going on in my business. What do y'all think? And they're sitting,
Hmm.
like you said, at the front of the room. Everybody's surrounding them, and we're asking questions. One of the best things you can do that can help somebody else is ask them a question.
Hmm.
Oh, so tell me about that. How does that process work? What did you do? And so we should be asking each other questions, and then start coming up with suggestions. And then the conversation will meander. It might turn out the initial thing that you said isn't the actual problem that you have. And so we're trying to uncover what someone's actual problem is. And so we'll spend 45 minutes ish on your business, your hot seat, and then we'll do it again and again and again and again over the next couple of days with more social time and hanging out. But you're staying in that same group of 10 people. So you get to have a bond with these folks and get to have a rhythm with these folks and get a depth of knowledge and emotional connection that you can't get in any
Yeah.
other kind of event that I've been to. So
Yeah, that's awesome. I mean, that's honestly, I've kind of stopped going to events because I kind of felt like it was the same thing happening over and over. So that sounds awesome, man. I think that's gonna be a great deal. About how many people do you have coming?
right now, I think we have close to 60, like 59 or something
Badass.
like that. So my goal is to get it to 100. And I'll be completely honest, this has been rough. I think in the land business, and rough to get people to come to events. I don't know what it's been like for some of the stuff you've had, but man, it's pulling teeth,
Yeah.
even for something like this. And I'm like, I'm not trying to sell you anything. Like there's no $50,000 coaching program at the end of this. Just come and network. And I guess things are just tight enough for a lot of people, or maybe there's enough events. I don't know. But whoever's going to come is going to come. It's going to be awesome. It's going to be amazing. And if I could actually plug something else, one other thing
Yeah,
that I'm
please.
doing is a free online course, Leadership in Land. So leadershipinland.com. And it's something that's not all put together. I keep on adding to it. We have kind of a podcast as well that's not even on Apple. It's just purely all on school. So people can check that out too if they want to. Just another free resource I'm just trying to put out there for this awesome community that's been so good to me.
Badass. Cool. Yeah, I'm checking it out right now. Yeah, I'll dig through there. Some good names. Yeah, Chris Duff's awesome. I've been listening to a lot of his stuff recently too. Great mind for this sort of economy we're in. I need some help. Just like you were saying, I'm like, I have no idea what's next. I just know I'm probably gonna keep buying land.
That's it, man. I mean, like I said, I mean, you got to get up to bat, right? I mean, you're never going to have a chance to get on base if you don't get up to bat to do it. So give
Yeah, and
yourself a
what
chance.
what I always reflect on is when I was buying my house here in Dallas. It was like I don't know 8 or 9 years ago, and everybody was talking about how crazy the prices were. And every time we would show up to look at a house, there'd be like literally dozens of people trying to do a showing at the same. It was just crazy, and everybody was telling me like you don't want to buy a house now. It's like the top of the market. Like it's going to be really expensive. You might regret this purchase, whatever. And we needed a house, so we ended up just pulling the trigger and getting it. But since then, like the rates have gone up, the price of the house has gone way up, almost doubled in value since we purchased it. So at the time, it seemed like a terrible time to buy. Everybody was telling us it was a terrible time to buy. If I could have bought 17 houses at that time, I would have. So I imagine folks are going to be thinking the same thing right now, especially if there's big changes in the value of the dollar. Um, well, cool, Dave. I really appreciate it. We ran over, but thank you for spending a little extra time with me. Folks, reminder, if you need funding for your land flips, entitlements, or subdivisions, get a hold of me. Go to landpartnerfunding.com or email me at thelandfixer@gmail.com. Dave, we look forward to seeing you on the next one. Bye.
Thank you, Logan.